that matters the most in e-commerce, when intent turns into action, i.e. a consumer's intent to purchase turns into a transaction. As we see transactions today, the biggest challenge that we face in e-commerce is that of friction. And when it comes to friction, I see two key areas. One is that there is a staggering rate at which consumers are abandoning carts today, owing to different types of frictions in the transaction, and the numbers we have seen go up to 70%. And that's a direct loss of revenue, that's a direct loss of business for the merchant, but also frustration for the consumer. At the same time, even consumers that are transacting online want a super slick and fast experience, and the data shows us that more than 60% of consumers are taking more than 2 minutes to transact. Now that's a pretty high bar in my life. If I want to simplify my payment, I don't want to spend time in just the checkout experience, and that's the part that we want to simplify. More than 60% of merchants today report facing one or more than one issue during the checkout experience from a processing perspective. And that is a challenge on an operational side that merchants have to deal with. So all in all, when we put together what we want to solve for, we want to solve for the experience of the consumer, reduce abandonment, increase the conversion rates, and solve for the merchant pain point on operational challenges, and overall bring simplification of payment experiences.
It's a very interesting question, because if you see the region, we see an increased adoption of e-commerce. Based on our recent data, digital volume increased by 658% in this part of the world. Adoption of e-commerce also growing much more frequently. 140% of the users in the UAE and Saudi specifically, they shop more than once per week. And last but not least, we see cash and delivery going down quite a lot, which means digital payments is becoming more and more relevant. And merchants, they become more and more sophisticated. We can see that they are becoming more attent, and they have more requests for safe and secure payment solutions. And they keep asking us something very basic. Payment needs to be invisible. Consumers shouldn't really feel when they make a transactions. That's why it's important. The safe security is there, but also the speed of transaction is going to be very more important. And that's why the collaboration of Checkout.com with MasterCard is very relevant, because we are working towards many solutions, such as tokenization, which help us, the consumers, to transact much more faster, and merchants obviously to accept this transaction in a more seamless way. And we also recently heard a lot of great feedback from the merchants, and specifically in our Thrive Abu Dhabi event that we had recently in the UAE, one merchant specifically was telling us, when a transaction fails, it's not about the lose of revenue, but the loss of trust of the consumer. That's why I think that trust element was really something that stood in my mind quite a bit. And I think that's why having great partners is really important, because you can't fix this problem alone. And I believe that specifically the tokenization element that we're tracking with MasterCard is really helping to solve what the merchants have been asking for.
When we look at what Remo just said, which is the outcome and the impact of friction in transaction is a loss of trust. Trust is the underlying premise of what we want to change with tokenization, right? So tokenization itself creates trust, and I'll talk about it very briefly how. Click to pay, which is added on to tokenization, then reduces the effort from a consumer perspective on checkout. And when we add biometrics, which is using your facial ID or fingerprint to actually authenticate or verify that you are making the transaction, it then creates simplicity. So if you break it down, number one, tokenization is a technology by which, instead of storing and using the consumer's card details in a transaction, we use a secure token, which inherently builds trust in the ecosystem. Today, we already have proof points that tokenization improves fraud rates by 2 to 3%, but also it improves approval rates of up to 11% when tokens are used for the first transaction. So the impact on the consumer experience as well as the merchant is profound. On top of that, there is still a number of use cases where we all as consumers actually are interacting with the merchant for the very first time, which means that that merchant does not have our card credentials, does not have our details, which also means that then we have to enter our 16-digit PAN number, CVV, and expiry date when we are shopping at that merchant. And that is what we are trying to change with Click to Pay, where we hold securely the credentials of the cardholder in a central, let's say, secure database, and are able to pull it up at the time of transaction with any given merchant who the consumer is transacting with for the first time, or where I have not saved my cards. And so Click to Pay itself, by remembering the card details, creates simplicity by reducing effort. And then lastly, we want to take consumers away from having to remember passwords, having to receive OTPs that have its own downsides as fraud and social engineering is increasing, and to be able to authenticate themselves with a simple facial ID or fingerprint authentication across any type of device, any type of payment method, and any type of channel that brings simplicity together with trust, right? So ultimately, merchants and consumers do not have to make a trade-off when it comes to, do I make a transaction experience more simple or do I make it more secure? The two sides should work hand in hand.
Prakriti already mentioned quite a few of them, but if you look from our point of view and listening to our merchants, first of all, it's not only about having more safe and secure transactions, but it increases overall the speed of any single authentication authorization that we do through our payment gateway. What does it mean in practice? Looking at some data that we have with some of our partners they've been working with, I mentioned a few. One was OSN, recurring business. After we enabled the tokenization service with MasterCard, we actually have been seeing them that for their business specifically, which is based on recurring payments, an uplift of acceptance rate, which means they were able to accept more transactions, which result in way more revenue. In the period that we tested this product, it was over $5 million extra revenue that the merchant has achieved, which actually was possible thanks to the new innovation that was put in the market. A similar result we actually saw on Travel Merchant Headout, that after enabling the tokenization service and a few other AI product intelligence acceptance that we do in checkout to boost the security on that kind of an e-commerce transaction, we see an increase of 5% of acceptance rate. So we can see how tokenization on one hand makes the transaction more safe and secure, but on the other hand overall increase the acceptance and the likelihood of a transaction to be accepted. Because I don't think there is nothing more frustrating for a customer that goes on the website and after you put all your products on your cart, you decide all the items you want to buy, and then at the last step, the transaction is going through. So the tokenization service really helped us to achieve that element. On top of that, we also keep experimenting new things in checkout, and it's a bit like MasterCard, they introduce new products. We also realize a lot of time merchants, they might not have necessarily the right integration to process the transaction. And obviously as a payment company, we need to be careful about the integration health, for example, how the merchant integrate and they pass the right parameter to make sure that, connecting with the payment scheme and the issuer, we obviously do the best to make sure the transaction is successful. So we did launch a new payment integration, which is called Flow. And thanks to that, we see 99% integration health score, which what does it mean in practice? That it's lower likelihood of a transaction to be failed due to an integration problem between the issuer and the scheme, the acquired payment processor and payment gateway. And we also see some interesting results with an additional feature that we enable on Flow, which is called Remember Me, which allows to tokenize the card with the biometric, which is already saved on our site, a decrease of 70% speed of transaction. So it's a bit like what Prakriti mentioned before, that is really relevant to make sure that the user has a seamless journey when they make an e-commerce transaction. And our objective is to continue to simplify this to make sure the consumers, they will have no friction when they make an e-commerce transaction.
So as we've alluded to this before, for us the future of checkout is invisible. Something that is secure by design, intelligent and effortless for everyone, both the merchant and the consumer. And that's the vision that we are marching towards. If I break it down, and we spoke about tokenization, we spoke about click to pay and passkeys or biometric authentication as the underlying drivers of how we get to that experience ultimately. And the vision really would be to deliver those, massive enhancements in conversion rates, massive enhancements in approval rates that we have seen in pockets with merchants that have already implemented these technologies, as Remo referred to it. But also for us, the future of checkout is to march in the direction of the future of commerce, which is moving into leveraging AI more and more, both in the front end consumer experience in the way that consumers shop, but also in the back end on how payment processing works. And so if I break it down first from the back end, improving security, improving risk scoring, intelligent authorization, intelligent routing, so that merchants and payment service providers can maximize the benefit from AI on getting the best cost savings and the fastest experience. And on the consumer side, we're starting to think about what does it mean when, as consumers, we're all moving towards discovery through AI, and we've always known how e-commerce actually started was discovery through online, right? Online discovery led to online purchases and the massive growth in e-commerce, and we believe that the discovery that now we are doing through AI bots is going to result in commerce in AI. And to start to think about what that might mean for us is the next click. And lastly, I'd like to say that the way we look at it from a MasterCard perspective is that we are enablers of interoperability. We create standards and frameworks that the entire ecosystem, whether it's merchants, issuers, or significant payment service providers like Checkout, can partner with us on and truly roll out the future of commerce in an integrated fashion, so that ultimately consumers know what experience they will expect. And the beauty will be when every transaction that I do online feels and happens as simply as I tap my card on a terminal in a face-to-face ecosystem.
A lot of things are very exciting, specifically in this region, because we can see that the future is definitely moving towards more digital. Yeah. So it's like a one direction from that point of view. There is a couple of things that we're working on and we're quite excited about. First of all, we definitely want to use more AI in smart acceptance. And one thing we keep innovating and working on is the ability to use intelligence acceptance, which is a checkout product, which allows merchants to do smart retries and boost the acceptance rate. We managed to recover in less than 2 years $10 billion of revenue for all our merchants to be using this product, and every 35 days we add one extra billion. So it's definitely a product that's been working very well, and we're looking forward to keep enhancing this in the next 12 months. The second thing which we're very excited is really to continue to work on the tokenization at scale, because we see the massive benefits, and definitely it's something we're not going to slow down. We spoke about this in the previous point, and definitely we want to continue to invest this at scale in all the countries in the region, because we've seen a great adoption in the UAE, and we're looking forward to expand this in the rest of the region. And the last point we're also very interested, we're very excited, is on the money movement part. We already mentioned that the payment is invisible when it comes to e-commerce, and it's also very interesting because we do see when somebody has a great payment experience, we don't really talk about it because we kind of expect it. But when there is a friction, we actually get frustrated, and actually we notice. That again goes back to the previous point of payments being invisible. At the same time, with Money Movement, we're very excited because we try to expand the same great user experience in e-commerce in other line of business. And I think that's why we're very excited to work on disbursement of payments on card, for example, which is something quite new in the UAE. We're very excited to be the first one with MasterCard to do that. And I think that will open up more opportunities for experience, because we talk a lot about pay in, how customers pay to merchants and run e-commerce, but not necessarily how we can improve on the pay out part. And it's definitely an element we're very excited, we're working towards quite a bit. We already have great feedback from merchants that have been adopting this product. And we do feel that thanks to that, we can also expand to new verticals and businesses, which traditionally in the region, they've been very cash heavy. So overall, we definitely want to make sure that we continue to create a seamless and secure solution while we keep innovating to make sure that our merchants, we can provide the best solution for the consumers.